Let's take a look at the commodity prices now, where we've seen the crude oil prices continue to buzz, holding around 4-month highs. Remember, we have seen nearly 30% gains in the crude oil prices since the December lows, and 2019 until now, we still are standing in double-digit positive there. So nearly 0.5% of gains on your screens right now. The Brent and the NYMEX continue to trade quite well there. But it is going to be about the US Fed meeting that starts today. The decision is tomorrow. That would add some uncertainty to the prices. You also have the US and China trade talks now perhaps progressing well is what we hear. But until that deal is done, it is still not done. But in the meanwhile, the crude oil prices continue to react to the weekend meeting, where we have seen bullish statements come in from Saudi Arabia and Russia on how the output cuts could continue well into June and beyond in the second half of 2019. That really seems to be lending support into the markets right now. Vandana Hari of Vanda Insights now joins us to talk further about that. Vandana, hi, always a pleasure to have you. What is your sense? How have you read the weekend statements from Saudi Arabia and Russia, especially on the April meeting getting cancelled? That really seemed to be the trigger for the prices to run up yet again.
Good afternoon, Manisha. Always a pleasure to talk to you and on your channel as well. I think a couple of slightly surprising things for me. First of all, it was quite unexpected announcement that they're cancelling the April meeting. Now, in the first place, when they planned the April meeting back in December, that was unusual because OPEC and since the past 2 years, OPEC, non-OPEC ministerial meetings have been twice a year. So given that they had agreed to cut production for the entire first half of 2019, didn't really need to meet, let's say, until June. But they planned this meeting a little bit earlier. At that point, my interpretation was that they are just wanting to keep a closer, keep their fingers on the pulse of the market, keep a closer eye on developments, and make smaller moves more number of times rather than having to make big U-turns and big moves, which could be, sudden shocks to the market. Seems like they concluded that they wouldn't have that much more information in just a few weeks' time, any more than what they have today or what they had over this weekend. But seems like a fair assumption to me. In a broader sense, it doesn't make any difference, I think, for the market sentiment. The cuts were intended to be for the entire first half of the year, so that's until the end of June, and that doesn't change. I think the Saudi minister had also indicated, in fact, when he was in New Delhi a few days ago, that had the April meeting gone ahead, he said most likely we would agree that nothing changes for the first half of the year. I think probably the slightly more interesting outcome for me was slightly different perspectives from the Saudi and the Russian minister on what might happen in the second half of the year. I think that is going to be interesting, how it unfolds going forward.
Point taken. But that is one part of the puzzle, really, because the other is about the economic data that we've seen from China, Europe and US, which really hasn't been on the supportive side. So while on one side, we have seen supplies kind of being taken care of on whether it is about OPEC and allies or the US output growth, which also is expected to slow down in 2019. What is your own sense on the reading of the economic data and the demand views now?
So the Saudi oil minister's contention is that there is oversupply in the market as of now. Inventories have been building the past few months. So OPEC OPEC, non-OPEC combined, needs to keep a very tight reins on the market. I tend to agree with that view. Again, you can't argue with what the Russian minister was saying as well. Alexander Novak said that, well, we don't know what's going to happen to Venezuelan production and Iranian production. So I think overall, definitely supply and fundamentals are coming back into the driver's seat for oil markets, without doubt. But we were talking about demand uncertainty the past 3 or 4 months. Now, supply uncertainty has also come into the picture. But overall, we see prices moving above 4-month highs today. I think the market is, generally the signals that the market is reading is that supply is tightening. OPEC and non-OPEC are well on their way to a strong compliance with their cuts.
Oh, well, that absolutely is the case because we've seen 86 and 83% in the months of Jan and Feb when it comes to compliance. So, Vandana, what is your sense? Because we keep hitting this resistance around $68 to $69 per barrel for the Brent prices, while everybody, of course, is talking about 70 and plus kind of levels. That's still, I believe, unless we really break above the kind of range that we seem to be forming, 70 is there and yet not there.
Yeah, it's almost deja vu for me because weren't we talking just a few weeks ago about, a few days even, about 70, 70 is just around the corner, is it going to get crossed? I still think there are enough counter pressures to an oil price rally as well. And as you just mentioned, quite rightly, the economic scenario is still questionable. There are still plenty of headwinds. And as I've been saying, and I'll say it again, the U.S.-China deal, when it comes, is not going to be the silver bullet. There is a lot of deceleration happening in other parts of the world, in Europe, and, of course, in the emerging market economies have their own challenges. So that's one. The U.S. production growth is quite strong. So OPEC is cutting, but the U.S. is adding, unprecedented amounts of oil into the market. So, and then, of course, you have Trump and his tweets. I don't think the U.S. president is going to stand by and watch Brent cross $70. I think we'll see some pressure coming from that end as well. And I think OPEC feels that pressure, no matter what they say officially.
So $70 per barrel isn't coming, and is it around the corner? Would you say that again?
I don't think 70. Well, can 70 be touched and crossed? Yes, but will it sustain? Will a rally above 70 sustain for Brent? I doubt it at this point of time.
Okay, we'll take it at that. Thank you so much, Vandana, for joining us. So $70 per barrel and beyond is possible, but sustainability, of course, would be an issue there.